Bismillahirrahmanirrahim. Assalamualaikum and welcome everyone. Today we are presenting our group project for the topic of MFRS 8 segmental reporting and MFRS 134 interim reporting. And the company of our choosing is Bank Islam. So before I proceed, this is my group member. So the first one we have ALEEYA, and next one is Syahmi, Omar. The third one is NADHIRAH, and the fourth one is me, Azam. The last one is ASYIQIN. So for the introduction, I will talk a little bit about the history of Bank Islam. So the establishment of Bank Islam, they started even before World War II, when Muslims in the country was searching for an alternative financial system that comply with Sharia. So Bank Islam was first accepted in 1983, and the creation of Bank Islam is the combination of tireless effort from Tabung Haji, Perkim and National Steering Committee. It was inspired by the Bumiputra Economic Congress in 1980 and a seminar on concept of development in Islam in 1991. Bank Islam aims to promote business growth, develop sustainable values, and advance the Islamic financial industry. Their aims are aligned with their vision and mission, which is to be the bank that advances properly for all and provide solutions to deliver value. Next, we move to the Chief of Decision Making and its responsibilities. So the word Chief of Decision Making is the highest level of management at which the decision of the company is made. The Chief Executive Officer, or for short CEO, is often referred to as the CODM, but is also intended to mean a function rather than executive with a specific title. The responsibilities of Chief Decision Making includes: first, allocates resource and assesses the performance. Second one, essentially controls the management committee. And the third one is to review the performance of the company. What we understand from the CODM is that in determining an entity's operating segment, it relies on identifying its chief operating decision maker, or for short CODM, which isn't necessarily a specific executive, but rather a function responsible for resource allocation and performance evaluation. While often the chief executive serves as the CODM, in some cases it could be other executive or even the board of directors. It's important to distinguish between executive and non-executive board members when identifying the CODM, as the focus of reporting under MFRS 8 is on management information used for operational decision, which may not align with the traditional role of non-executive directors in a corporate governance.
Next, operating segment. MFRS Act defined an operating segment is a component of the group that engage in business activities from which it may earn revenue and incur expenses. This including revenue and expense that relate to transaction with any of the group's other component. An operating segment results are reviewed regularly by the Chief Operating Decision Maker, which is the Chief Executive Officer of the group, to make decisions about resources to be allocated to the segment and to assess its performance. Under MFRS Act, entities must disclose certain information about their reportable segment. For example, this includes revenue from external customer, revenue from transaction with other operating segment, segment profit or loss, segment asset, and other relevant information. The box here shows that segmental reporting in annual report of BIMB, Bank Islam Malaysia Berhad. There are 4 types of segment in BIMB. Number 1, consumer banking. This segment includes financing, deposit, and other transaction and balance with retail customer. Number 2, corporate and commercial banking. This segment includes corporate finance activities, financing, deposit, and other transaction and balance with corporate customer, commercial customer, and small and medium enterprise. Next, treasury. Undertakes funding activities through borrowing and investing in liquid assets such as short-term placement and corporate and government debt securities. And the last one is shareholder unit, which is operate shareholder fund.
So for the accounting policy, there are 3 accounting policy identified from the annual report. First one is MFRS 108, which is about the accounting policy and changes in accounting estimates. So according to the annual report, the amendments redefine accounting estimates as monetary amounts in financial statement that are subject to measurement uncertainty. What we understand from that is that the amendments make it clear that when there is a change in how an accounting estimate is calculated, it is considered a change in the accounting estimate rather than a change in the accounting policy. As long as it's not due to mistakes from previous periods. Accounting estimates covers things like expected credit losses, the value of inventory, and the asset or liability fair values, depreciation, and warranty provisions. Next one is MFRS 112, which is deferred tax to assets and liabilities arising from a single transaction. So from the annual report, it states that the amendments clarify that the initial exemption rule does not apply to transactions where both an asset and a liability are recognized at the same time, such as leases and decommissioning obligations. As a result from MFRS 112, companies must acknowledge both deferred tax, assets, and liabilities for any temporary differences in taxes arising from these transactions. Last one is MFRS 120, which is government grants. From the annual report, it is stated that grant from the government is recognized at fair value when there is a reasonable assurance that the grant will be received, and the group and the bank will comply with all attached conditions. Government grants linked to expenses are recorded in the profit or loss over time to align with the associated costs that the grants aim to cover.
I would like to explain about the company performance of BIMP. For the segment of consumer banking, it shows that from 2021 to 2022 improved by 425,927,000. Second segment, which is corporate and commercial banking, also improved by 5859,3000. But for the treasury, it shows that the revenue under this segment will be decreased by 70925,000. And the last one, for the shareholder unit, will be improved by 1934000 from 2021 to 2022. In addition, for the profit of the BIMB will be improved by 42645,000 from 2021 to year 2022. And increase in profit indicate improved financial health for the company. In addition, for the profit of the BIMB will be improved by 42645,000 from year 2021 to year 2022. An increase in profit indicate improved financial health for the company.
And here are the screenshots that we received from the annual report. First trends is market conduct. The strength of market conduct is that consumer protection will remain a priority as Bank Islam offer products to strike a balance between inclusivity and fair treatment. Fair treatment of consumer is essential to inspire positive user experience and customer outcomes. So what I understand from the strength of the trend is that while providing products to consumers who might carry some level of risk, ensuring consumer protection remains a top concern. The aim is to find middle ground between inclusivity, allowing access to a broader range of consumers, and ensuring fair treatment. So next, the weakness of the trends is that the bank may face false claims from customer, putting the burden of proof on the bank. The last one, which is the opportunities of the trend, it can offer more social financing strategies and products. Second, it can explore marketplace platforms to support small business in Malaysia. And the third one is they can partner with fintech companies to provide financial solutions to the less fortunate. These opportunities indicates plans to expand financial support through new strategies, aid small business via online platforms, and team up with fintech firms to help the less fortunate communities.
Secondly, in strategic focus, the trend is advancing digitalization of financial sector. Advancing digitalization of the financial sector refer to the process of furthering the use and integration of digital technologies within the realm of finance. The strength of this trend is the impact of digitalization on financial services is widespread and extensive. Digitalization has touched every corner of the financial services landscape, revolutionizing how transactions are conducted, services are delivered, and information is accessed. Besides, Customers want faster, easier, and personalized services, while also caring about data privacy and security. And digital business models are increasingly ecosystem driven, which create new risks and conflicts. The weakness from this trend is transformation or risk could threaten system-wide stability, consumer outcome, and confidence in the financial sector. This restricted not only the stability of individual institution but also the entire financial system. Such transformation can lead to unforeseen consequences, affecting consumer outcomes and confidence in the financial sector. The emergence of new technology and partnership also bring about new risks related to cyber security and data security. With greater connectivity and data sharing, financial institutions become more vulnerable to cyber threats such as hacking, data breach, and ransomware attack. So, the opportunity is BIMB to safely introduce new financial innovation into the market at different stages of the innovation cycle. And the second opportunity is the issuance of the digital banking license, but BNM put us in the right time and place to accelerate and put forth new digital offering. Trend is climate change and sustainability. The strength in this trend is regulatory priorities will likely focus on climate risk. Related regulation to meet rising expectations from client, investor, and stakeholder. BNM main goal is to promote financial system resilient by improving climate-related and environmental risk management in the financial sector. The weakness in this trend is balancing investor financial interests with ESG, stand for environmental, social, and governance priorities could be challenging. So, the opportunities is attracting new customer segment that prioritize sustainability. Second, government tax incentive for ESG initiative. And third, enhancing the bank brand equity by integrating ESG elements throughout its vision, operation, and product offering.
Moving on to part B, we will continue to present the MFRS 134 interim reporting. Bursa Malaysia requires all entities whose debt or equity securities are publicly traded to publish interim financial reports. Interim financial reports is a financial report for a period shorter than a full financial year. It can be complete or condensed set of financial statements. The reason of preparing interim reporting is to provide investors and other users with more timely or current information. It also enables internal and external users to evaluate entities' financial position, performance, and cash flows on continual basis. Bank Islam Malaysia Berhad (BIME) uses several bases in preparing the interim reporting. In terms of compliance, it is prepared in accordance of MFRS 134 Interim Financial Reporting and IAS 34 Interim Reporting. Next, Bank Islam use Ringgit Malaysia RM to prepare the whole financial statement as the company is fully operating and conducted in Malaysia. The financial estimates and judgment is reviewed on an ongoing basis, where reviews to accounting estimates are recognized in the financial statements in the period in which the estimates are revised and in any future periods affected. Bank Islam uses these two accounting policies, which are Property, Plant and Equipment (MFRS 116) and Intangible Asset (MFRS 138) to prepare the interim financial statement. Items of PPE are measured at cost less accumulated depreciation less accumulated impairment loss. They are accounted as separate items. The subsequent measurement is based on cost model, where depreciation is deducted from the cost. Depreciation is calculated on straight line basis. All of the PPE is depreciated except for the freehold land. Bank Islam has purchased computer software to run the company, and it is recognized as the intangible asset under MFRS 138. It is because the development costs met the criteria of intangible asset. Other than that, the directly attributable costs are capitalized. The intangible asset is amortized over 5-year period of useful life.
Assalamualaikum, I'm NATASHA binti ZULKIFLI, will present type of interim report. Interim financial statement should include, first, each of the heading and subtitle that was included in its most recent annual financial statement. The second one, selected explanatory notes as required by the standard. And the third one, basic and diluted earning per share on the face of the statement of profit or loss and other comprehensive income. Bank Islam Malaysia Berhad have prepared several unaudited interim financial statement, which is statement of financial position, statement of profit or loss, statement of other comprehensive income, consolidated statement changes in equity, condensed statement of cash flow, and notes to the unaudited interim financial statement. This company prepared interim financial statement in quarterly report. For the first quarter, start as 1 January 2023 till 31st March 2023, and the second quarter start 1 April 2023 till 30th June 2023, and the third quarter start 1 July 2023 till 30th September 2023, and the last quarter start 1 October 2023 till 31st December 2023. Move to the period of interim report for statement of financial position. Interim financial report start 1 July 2023 till 30 September 2023, and the comparative financial report start 1 January 2022 till 31st December 2022. For statement of profit or loss and other comprehensive income, 3 month ended, interim financial report start 1 July 2023 till 30 September 2023, and the comparative financial report start 1 July 2022 till 30 September 2022. Statement of profit or loss and other comprehensive income ended 9 months, interim financial report start 1 January 2023 till 30 September 2023, and comparative financial report start 1 January 2022 till 30 September 2022. For statement of changes in equity, the interim financial report start 1 July 2022 till 30 September 2023. For the comparative start 1 January 2022 till 30 September 2022. And the last one, statement of cash flow, interim financial report start 1 July 2023 till 30 September 2023, and the comparative financial report start 1 January 2022 till 30 September 2022.
Assalamualaikum warahmatullahi wabarakatuh. My name is NATASHA bin AZMI and my student ID is 2023385541. Today I will present about the adjustment. For the first adjustment, on 1st January 2022, Bank Islam Malaysia Berhad purchased an office equipment costing of RM32,100,000. BIMB estimates that the office equipment will lose its value by 40% each year and have a residual value of RM100,000. BIMB have adopted straight line method, but we propose BIMB to use reducing balance method. The depreciation as at 31st December 2022 is RM12,800,000. The cumulative depreciation as at 31st December 2023 is RM35,600,000. On the 1st January 2022, the current value of the office equipment was RM32,100,000. Then there is a cumulative depreciation on 31st December 2022, which costing of RM12,800,000. Then the current value at the end of the year was RM19,300,000. For the 2023, the cumulative depreciation was RM20,480,000. Then the carrying value at the end of the year of 2023 was RM11,620,000. Next, for the second adjustment, which is disposal. On 1st January 2022, motor vehicle costing of RM800,069,000 with accumulated depreciation amounted to RM800,020,000 as at 1st January 2022. BIMB depreciated the motor vehicle using a straight line method and a monthly basis with a useful life of 5 years. On 1st October 2022, BIMB decided to dispose the vehicle with carrying amount of RM200,000. The vehicle has been used for 2 years. Before adjustment motor vehicle, the cost as at 1st January 2022 was RM869,000 minus accumulated depreciation as at 1st January 2022, which is RM830,000. The carrying amount as at 31st January 2022 was RM417,000. Then minus depreciation for the year, which is RM470,000, divided by 3 years, which is RM139,000. Then the carrying amount as at 31st December 2022 was RM278,000. Last, for the after adjustment for motor vehicle, the cost as at 1st January 2022 was RM816,000 minus accumulated depreciation as 1st January 2022, which is RM830,000. The carrying amount as 31st January 2022 was RM470,000 minus depreciation for the year, which is RM470,000 divided by 3 years times 9/12, which is RM104,250. The carrying amount as 31st December 2022 was RM312,750. Then there is a disposal on 1st October 2022, which is RM450,000 minus carrying amount as at 31st December 2022, which is RM312,750. So there is gain on disposal, which is RM 137,250